Hey everyone, so every time you ask an AI a question, a server somewhere draws power. Today let's dive into a super fascinating dynamic happening in the market right now, how the booming AI sector is turning to a surprising, old-school technology to solve a massive power crunch. Welcome to today's Explainer, where we're unpacking the incredibly lucrative relationship between artificial intelligence and nuclear energy. We're going to focus on a company quietly positioned right at the center of the modern tech map, and that is Constellation Energy.
Real quick, here is our roadmap for today. 1. The AI power crunch. 2. The nuclear solution. 3. Big tech alliances. 4. Financial health. And 5. Investment risks. Let's get right into it.
Section 1. The AI power crunch, fueling the future.
Okay, so here's the multi-billion-dollar question we're all looking at. Data centers require just immense amounts of electricity, right? But how do we actually power them without totally abandoning our climate goals? Tech giants have made these super aggressive zero-carbon pledges, but the reality of training massive language models means they are drawing power at literally unprecedented scales. They need a solution that is incredibly clean, but also incredibly robust.
And that brings us to the crucial missing piece, baseload power. Basically, this means energy production that is carbon-free, but it runs 24 hours a day, 365 days a year. Intermittent renewables like solar and wind, they simply cannot do this alone. I mean, the wind doesn't always blow, and the sun obviously sets every day. But AI data centers literally never sleep. They demand an uninterrupted flow of electricity to prevent catastrophic downtime.
Section 2. The nuclear solution. Meet Constellation.
Spun off from Exelon back in 2021, Constellation Energy commands America's absolute largest nuclear fleet. You can kind of think of them as this really energetic, high-tech guide bridging the gap between legacy-heavy industry and the future of Silicon Valley. They stand squarely between the massive data centers of tech giants and the energy grid, essentially transforming a decades-old industry into a futuristic, indispensable tech enabler.
Here's a wild statistic for you. Constellation maintains a world-class nuclear capacity factor of over 90%. That means their plants operate at maximum capacity more than 90% of the time, totally regardless of weather conditions. This reliability creates a massive technological moat that standard renewable sources just cannot match. It's super impressive.
But generating massive power is really only half the battle. The other half is flawless management. Constellation has actually launched their very own AI-powered demand response programs. They are literally using artificial intelligence to help their massive tech clients optimize consumption. It's such a cool synergy, using AI software to stabilize the grid that feeds the AI hardware.
Section 3. Big Tech Alliances, the 20-year contracts.
So we're seeing these absolutely unprecedented power purchase agreements, or PPAs, hitting the market. First, Microsoft signed a 20-year deal for 835 megawatts to literally restart a dormant reactor at the 3 Mile Island facility, which is now renamed the Crane Clean Energy Center, exclusively for their data centers. Then, right on the heels of that, Meta locked down over 1,100 megawatts from the Clinton facility starting in 2027, also on a 20-year contract. The sheer desperation for reliable clean energy is driving these huge, decades-long commitments.
And these agreements represent a really historic shift to true market-based solutions. For years, the nuclear industry relied heavily on state subsidies just to stay afloat. But now, massive private tech demand is stepping right in. We are witnessing the complete commercial reevaluation of nuclear power, transitioning it away from a subsidized legacy sector and turning it into a market-driven pillar of the global economy.
Section 4. Financial health by the numbers.
All right, let's open up the books, because the Q1 2026 numbers show exactly how those tech alliances translate to cold, hard cash. They pulled in over $11 billion in revenue, a net income of $1.59 billion, and an adjusted EPS of $2.74. But for me, the real standout metric is their target of 10% annual dividend growth. Those 20-year tech contracts totally insulate Constellation from wild price swings in the energy market, locking in highly predictable cash flows.
And the broader market is clearly recognizing this extreme revenue visibility. Through June and July of 2026, Constellation's stock charted aggressively upward, trading well past $262 and approaching the $274 mark. Wall Street absolutely craves predictability, and 2 decades of guaranteed revenue from heavyweights like Microsoft and Meta delivers exactly that.
Looking ahead, the company is projecting a rock-solid full-year adjusted operating earnings guidance of $11 to $12 per share for 2026, coupled with massive regulatory tailwinds like the Department of Energy offering loan guarantees and the NRC backing license extensions. Their financial runway looks remarkably clear right now.
Section 5. Assessing the investment risks.
Now, to be totally objective as investors, we have to assess the speed bumps here. Restarting old reactors demands massive upfront capital expenditures. It is never as simple as just flipping a switch. You also have strict scrutiny from the Nuclear Regulatory Commission, where any licensing delays mean huge cost overruns. Finally, the industry inherently faces social and environmental concerns regarding radioactive waste, which can easily lead to intense public pushback and delayed operations.
So balancing those intense execution risks against the incredible visibility of 20-year tech alliances brings us to a really profound question. Is nuclear energy the ultimate long-term victor in the AI arms race? As data centers eat up more and more of our grid, Constellation has positioned itself as the gatekeeper of carbon-free baseload power. But will the staggering complexities of atomic energy be its Achilles heel, or the ultimate moat that secures its dominance for decades? It's a wildly fascinating landscape, and I'd love to know what you guys think.